Maruti Suzuki has reported its numbers, and the third quarter numbers are largely ahead of the street's expectation. And I mean, at least as far as the profitability is concerned, there is a beat there. Profit for the quarter stood at about 3,130 crore, which is a 33% surge compared to the year ago period. The street was expecting the figure to come somewhere around the 3,000 crore mark. Revenue also saw a 15% or so uptick. That came in at around 33,309 crore for the December quarter versus 29,000 crore in the previous in the year ago period. EBITDA, earnings before interest, tax, depreciation and amortization, saw a 38% spike to 3,908 crore from 2,833 crore in the year ago period, and margins improved by 190 basis points to 11.7% from 9.8%. And Avinash, coming to you, what's your overall assessment from the Q3 print of Maruti? Because it seems that the street is happy with the numbers. The stock ended about 3% higher today, isn't it?
No, I think, Suyash, I think if you see the numbers, the revenue grew by about 14% and the profit after tax was up by almost 33 to 34%. Now, I think volume growth was something which was better than expectations. In fact, for the 9 months, the company has said that it has sold the highest number of vehicles. And I think on a very broad basis, one good part was that, margins have improved largely because raw material prices have been under control. The company has raised prices, so I think they will obviously be getting the benefit of higher improved sale realizations. But I think the profit growth was something which made the sentiment more positive, and either stock was up by about 2 to 3%. Going forward, my sense is that the coming year will be a much better year, considering the fact that rural demand is picking up slowly, and I think even in the urban markets, at least from the larger size kind of vehicles, Maruti controls a reasonably good market share. So I think despite a lot of competition from other players, I think Maruti has done a reasonably good show, and I think numbers have been better than street numbers. So I think now the conference call is going on, Suyash. What kind of growth outlook the management shares and what kind of margin outlook the company management shares is something which I think most of the analysts will be looking forward to. But net, it's a good performance. Hopefully, if this performance traction is maintained, then I think you could see a further re-rating.
All right, and Maruti Suzuki, I mean, the overall stock has been an underperformer when you look at vis-a-vis Nifty Auto and other auto stocks like your Tata Motors as well. In fact, the company lost the title of being India's most valuable auto company yesterday after Tata Motors surpassed the market cap of Maruti Suzuki. And I was also reading one of the interviews from Mr. R.C. Bhargav, who said that they'll perhaps launch EVs outside India first, before launching it next year in India. Do you think they are missing the mark here compared to other companies like your Tata Motors?
No, I think clearly, launching electric vehicles outside India and then India could be a little more kind of a negative surprise, because see, today if you see Tata Motors, they control almost 40 to 45% of the passenger EV market. Even Mahindras are now planning very big in the electric vehicle market. So I think this kind of strategy the market may not be able to understand. India is a very large market for electric vehicles, and I think the kind of growth numbers we are seeing clearly shows that somewhere I think Maruti has not possibly calibrated its strategy on the EV market. So I think, well, let's wait and watch. I think they have the technology, they have the products. I think when they launch, I think one could get a better sense of how they will continue to do on ground. So I think as of now, it looks as if Maruti is not very well positioned on the EV market, and I think we'll have to wait and watch how the progression takes over.
All right, Maruti's progression as far as its EV portfolio is concerned is still in a wait and watch mode. That's the view coming in from Mr. Avinash Gorakshakar. Sir, great insights from you as always. Thank you for joining us here on News 9.